So the question, you can create, protect, and multiply your wealth in any economy, and have interviewed the top investors and wealth experts for over 3 years. I share what I've learned from them and continue to learn on my journey. I'm MC Laubscher, and this is Cashflow Investing Secrets. Hello everyone, MC Laubscher here, and thank you so much for joining me in another episode of the Cashflow Investing Secrets podcast. This is the show where cash is not king, cash flow is king. Here is why infinite banking can be a nightmare to you. So, a couple of thoughts. The first thing is, it wasn't structured with the right agent. There are several agents in the United States and Canada. There's some great people in the infinite banking community that can structure these vehicles specifically and design it and set it up with the right company and design it properly for it to do what you want it to do, and as it's described in the book, Becoming Your Own Banker, and as I explain it. So there are a lot of great agents. So the first reason why it could be a scam and a nightmare is it's not set up by the right agent. And by the way, one of the big issues that I have with financial services and with a lot of professionals that assist people in the space around money and the niche of their money, whether it's taxes or financial advice and so forth, is that most people in those industries or in that industry cannot tell the people that they're helping that they don't know how to do something. They think it makes them look stupid, for lack of a better term. Which is, by the way, I have more respect for folks that say, I don't know about that. Let me find out. Let me get back to you. Right? So anyway, so they go to the wrong agent, and the agent said, well, of course I could put that together for you. How hard can it be to structure a whole life insurance policy? Give me that book. I'll read it too, right? So they go to the wrong agent. That's the first thing. The second thing is it's set up with the wrong company, right? The infinite banking concept and the policies that is spoken about in the book and the concept itself is structured with mutual insurance companies. Mutual insurance companies are not listed on the stock exchanges. They are not stock companies. They're not property and casualty companies. If you do it properly, there's a handful of phenomenal mutual insurance companies. It drives me crazy when people argue which ones are best. If they've been around for close to 200 years or over 150 years and pay dividends for over 100 years consecutively and have billions of dollars of cash reserves on their books, they are all phenomenal. So it drives me crazy when people argue which ones are the best. Structured with a mutual insurance company. That is the first thing. And do your due diligence of which ones are out there. There's a handful that's phenomenal, right? So got to structure it with the right company, not a property and casualty company. The third one is it's even the wrong vehicle. Let me start there. So this is a overfunded, dividend-paying whole life insurance policy with a mutual insurance company. It is a dividend-paying, overfunded whole life insurance policy with a mutual insurance company. It is not a universal life policy. It is not a universal life policy. It is not a universal life policy. So let me just get that out of the way. So it needs to be the right vehicle, number one, and then it needs to be structured for max cash value. So year one, immediately, if you, let's just say you make a premium payment, relatively quickly after you've made a premium payment, there should be cash value in that policy, and you should be able to access some of that cash value through a policy loan. Otherwise, it was not set up correctly. So that is the third piece, okay? And then I would say the fourth piece of why this might not work, and this has happened before too, why the infinite banking concept and strategy might not work for people is you could go to the right agent. You could have your policy set up with the right mutual insurance carrier. You can also have the policy structured perfectly, but you're mismanaging your policy. You're not making the premium payments as the policy was structured. You're stripping your policy bare, whether it's, regardless of what type of mutual insurance company it is, you're stripping your policy bare and taking all the money out, and you're not being an honest banker, as Mr. R. Nelson Nash would say in the book, Becoming Your Own Banker. You're not an honest banker, and you're not paying policy loans back as you should. And guess what? If your policy is not managed correctly and utilized correctly by you, it is not going to perform as you wanted, and it's not going to function and work as you wanted it to work in your strategy. So the biggest responsibility is actually on the policy holder. Once it's set up with the right agent, with the right company, and structured correctly, it is the responsibility of the policy holder to manage their policy effectively and efficiently to get the maximum value that they wanted out of this policy initially, right? So those are just some thoughts of why infinite banking and the infinite banking concept and the infinite banking strategy utilizing an overfunded whole life insurance policy with a mutual insurance company could be a nightmare. And we've all heard the criticisms of whole life insurance that, it's a terrible investment. Insurance should never be sold as an investment. It's life insurance. It's a savings vehicle, number one. So I agree with Dave Ramsey and Susie Orman, right, on that. It's not an investment. It's a savings vehicle. Some of the other things is it's structured for the benefit of the agent to maximize commissions, and they get large commissions from this. Yes, if it's structured incorrectly, it is structured and tailored for maximum commissions for insurance professionals. Agree with that too, Dave Ramsey and Susie Orman. The way that this is structured actually reduces the commission of the agent significantly, the professional that's putting this together for you. So it's not the same thing. And then also, all of the other things that's in there, I've heard a lot of criticisms. One of the things is, well, if you put money in a whole life policy and you die, you never get your cash value, for example, is one of them. By the way, if it's structured correctly, you do, because your death benefit appreciates along with your cash value. And what other vehicle under the planet actually pays you a multiple of the account value if you pass away? Let's compare that to a IRA, and let's compare that to a 401k. Let's just say you have $500,000 in a 401k. How much money do you get out when the person whose 401k it is passes away? How much money does the beneficiary get, right? They get what's in there, and then they're going to pay taxes on that too. Compare that to the life insurance policy. Let's just say there's $1 million death benefit, just for round numbers, and there was $200,000 in cash value. They pay out $1 million on death benefit if that person passes away, tax-free to the beneficiary. That's a multiple of 5 right there. Tax-free, and you don't have to pay taxes on that. So there's a lot of differences between these policies and just your retail cookie-cutter standard whole life policies that is sold to the majority of the public. There's a way to invest in real estate and to buy real estate like the 1%, and there's a way to set up and structure and utilize life insurance as part of your overall strategy like the 1%. For more information, I do have a video series where I get really deep into this. It's at yourownbankingsystem.com, yourownbankingsystem.com. Again, my friends, I appreciate you spending your most valuable resource with me, your time. Live your freedom, live your legacy today on your own terms.
If you are interested in learning more about cash flow investing, I have compiled the 21 best cash flow investing strategies I have come across studying millionaires and billionaires for 2 decades and interviewing over 500 successful investors and wealth experts. You can grab the 21 cash flow investing strategy secrets at 21cashflowinvestingsecrets.com. That's 21